You see this? This is what dodging bullets looks like here, folks. I'm no longer trying to outperform the market. I'm just trying to survive and get to the other side of this relatively unscathed. And oh my goodness, guys, after those Netflix earnings, it only went lower. My blessings and my prayers go out to you holding Netflix. And I don't think my buddy could have sent me this on a better day. My boy sent me this meme as a canvas, and it is wonderful because Tesla posted earnings today, and I've had an angel and devil on my shoulder about this stock, and thank God I still have a reasonable size position in it, because even though it's crazy overvalued, damn it, it's the only stock growing at ridiculous paces in the S&P top 10. So we're going to be talking about Tesla earnings. We're going to be talking about Procter Gamble, damn it, those wonderful consumer staples that have had real pricing power, that have been surviving this and offering some beautiful stability to my portfolio. But first and foremost, if these are conversations you appreciate, hit that like button, because we got to look at the markets here first, folks, because when we scroll through my watch list, these are all the positions that I'm holding. I'm not a genius here, folks, but it's no surprise after listening to many of hedge funds recently saying, look, if things even slightly slow down, we have to readjust our risk tolerance, because they were buying these heavy growth stocks based off the risk percentage rating of growth they were expected to get. Now that the growth's kind of going away, they're like, hey, we'll trickle on back into those safety and security plays here. And don't get me wrong, by all means, I'm bullish as hell on the technology revolution we're about to see. We're just taking the cyclical breath after that crazy run through the March 2020 phase, right? But I mean, if you want to see the future of tech, go watch NVIDIA's keynote that came out like a week ago. My God, it was mind-boggling on how every facet of industries they're touching, from medical to self-driving. Wonderful stuff. And I love that the stock is tanking, because these are things that I'm constantly watching on my buy list. But many of you know, out of my own fickle fear of not really being a trader, people are calling me a trader, but I am an active manager of my portfolio. And basically, I've scaled tech down from what used to be a 30% weighting to a 16% weighting. And even scaling it down that much, I haven't been able to avoid all the bullets that have been scaving me. And we'll take a look on my watch list, because there's one thing you will notice: lots of green, baby. The trend will always be your friend, and this is the trend of a risk-off environment. So first and foremost, BABA. Yeah, I don't know if I caught the bottom there. I sold half that position, got really skittish on it, saved myself a bigger loss because I'm down like whopping 20% on the recent buy. But nonetheless, I hope it stops going down. Who knows? Nobody knows. I'm sorry. I thought I called the bottom. If it goes much lower than this, my bottom call is completely out the window. But nonetheless, even Bitcoin's green today. But look at that. Tesla's coming back with a vengeance after those earnings, guys. I mean, Pfizer's down a little bit. But nonetheless, almost every single stock in my portfolio is muy bien in the green. Now, as we go lower, we're going to start seeing where the pain really hits in, because you couldn't touch any mega cap tech outside of a few exemplifiers like Apple, Amazon, Tesla today anyways, with Facebook trading down 7.33%. Who, pat myself on the back in the near term, save some money there. Google, don't own any of that right now. People are going to criticize me for that. Shopify, I want to buy Shopify. It's down a whopping 14% today alone, guys. And my prayers go out to you. I don't want to see anybody lose this kind of money. I hope you guys are long-term thinkers and you can survive this. Like I said, I do my own thing here. I'm not trying to shill you stocks. I'm just kind of presenting things that I find interesting in companies that I work with. But God, guys, like Amazon lowered their guidance to single digits for this year. What's going to happen to Amazon if they even slightly miss? I mean, it sends chills down my spine. Maybe this is a good earnings period to sit on the sidelines, because even if you like Tesla, maybe I would have sat on the sidelines and just buy in tomorrow, because it's not like any growth stock is flying up even with good earnings here. But as we scroll down, guys, you're going to see the only real green throughout my watch list are those consumer staple security stocks, where they're talking Waste Management, 3M, the REITs like Realty. I mean, you got Fortis, Unilever's even up 1.8% today. Somehow, MindMed and Momentous, some of the two most speculative companies I watch, are green today. God knows how, when Ouster, Hyliion, Virgin Galactic, Rocket Labs, Kronos Group, the Canopy, all just sending chills down your spine if you're checking your portfolio on the daily. But nonetheless, let's go look at the actual earnings here, because guys, I'm a Tesla fanboy. I've had an angel and devil on my shoulder saying, should I sell it? Should I buy more of it? So I keep the reasonable chunked position, and I've got some cash on the sidelines. I was thinking about pivoting it into some REITs, my Canadian apartment properties, some more Bell. Bell's been crushing it somehow too. And I've also got cash in my TFSA from dividends that I'm looking to load up on perhaps Apple, perhaps Microsoft if they miss earnings. I pray they miss earnings, because they're companies that I actually want to own a lot more of. And I've deleveraged them to this point to leave 30% bleed room, so I'm not all in them. So if they do come down, I can buy more. And even if they go up a bit, I'm not really losing much more than a few percentage points, because something tells me nothing is going to skyrocket in this market. So patience, very likely going to pay off for me here. But let's take a look here, because oh my God, guys, Elon hinted that their easily going to do over 50% growth this year. And adjusted EBITDA was up 173%, bringing their PE ratio down, their forward PE, to below 90. Damn it, if we can keep up with this growth rate, we'll be well below Apple's PE in the next couple years, 2-3 years. So we just got to be patient here. I still think now, after looking at this, there's some good opportunity if you wanted to buy it for a good spec growth play, even at these current values, which again are nuts. There's going to be volatility that comes with that. But we're going to talk about the risk versus the reward here, because the stuff that I really pay attention to, because everyone values this as kind of a car company, whereas the stuff that I love hearing about, let me scroll down, because everyone talks about FSD and all that other stuff. I'm sure you've watched enough videos, but maybe not too many people are talking about energy storage, which, by the way, their solar, retrofits and basically their energy storage deployment, let's start with that, increased by 90% year over year in Q1 to 846 megawatts, mainly driven by strong Powerwall deployment as demand remains substantially above capacity. Growth has been limited by ongoing supply chain challenges. We are in the process of ramping production at the dedicated Megapack factory to address the growing demand. The fact that they're doing as well as they are in this environment speaks mountains about how this company is able to, achieve their logistics. I mean, this is nothing short of a marvel, to be honest, with how bad companies are getting slaughtered on earnings. But take a look, because basically their services and other gross margins are finally getting to a place of positivity for the first time. So I feel like these are the cherries on top of the cake. The auto business alone over the next 5-10 years will justify the value, but we need that cherry, right? And the problem is you can't trust Elon. That's kind of the negative, right? When we're talking about self-driving in general, autopilot, Elon is very over-optimistic sometimes about their timelines with their technology, and sometimes it hinders them greatly, like obviously putting aside the Roadster to focus on the Model Y, Model 3, get that up to production because obviously there was issues. I mean, the stories, right? So I would be a little cautious, because even if they roll out or have some, municipality or state that allows them to start testing self-driving, it's going to be very limited. It's not like you're going to flick your car on and have it immediately become a robo-taxi. So that stuff I'd be more patient with. That's going to take some years to roll out still, but maybe we'll see a glimpse of it at the end of this year. And then hopefully with a little bit more excitement into next year with the robots and, the automated, who knows what those robots are going to be able to do. You watch Boston Dynamic and I'm like, is that the starting level? Or is Elon thinking they can go beyond that with their first iteration? I don't know. We'll find out as time goes on. But let's talk about Procter and Gamble here real quick, guys. I love these companies. Many of you know I kind of bit my tongue and just started recently adding Procter and Gamble at these highs here somewhere. I think it was about a month ago or something like that, because I just got tired of this company. I feel it's always overvalued, but it's overvalued for a reason, because it offers security, protection, and dividend growth. Now, if you don't know Procter and Gamble, you've been living under a rock, because you probably lose everything from their tampons, damn it, those hygiene products like shaving cream, to the toilet paper and the baby diapers and the hand wipes and all that stuff in between. They have really incredible pricing power. And somehow in the mess of this geopolitical event, these logistic nightmares, this pandemic, they've still been able to deal with it by just, increasing the prices and getting away with it. Where something like Clorox wasn't able to scathe through it as well. I'm very proud of Procter & Gamble here, with earnings of $1.33 adjusted versus $1.29 expected, revenue $19.38 billion versus $18.73 billion expected. Now, we got to keep in mind here, guys, that they did get slightly hit. If we read the top of this, the consumer good giant reported a quarter riddled with economic challenges, elevated commodity and freight costs dented the company's margins, but higher prices and productivity savings helped kind of counteract some of the drag on profits. Procter & Gamble's gross margins fell 4% or 4 percentage points compared with the year ago period, although its operating margins dropped just 0.1% or 1 percentage point in the quarter. Now, if we just kind of read the statement here from the CFO, he says, if we look at the current situation in the market, the imbalance between supply and demand, geopolitical disruptions, the need to disrupt supply chains, higher energy costs due to the war between Ukraine and Russia, all of these will continue to put pressure on the cost. So this is one of those things where it's like, hey, we're scared, we're worried, but we're surviving. We're doing okay. We can raise our prices. We can be one of the causes toward inflation and not care, because you're the end user. You're going to be taking that out of your pocket. And we've seen the JP Morgan earnings. We know you guys are stocking more money in the bank, and we know you need your toilet paper and your tampons. So we ain't too worried. And I'm happy for it, guys, because these are the stocks that I have obviously been running to, and we're doing okay. I mean, Procter & Gamble's up 2.87% today. Who would have guessed? Who would have guessed? I didn't guess, but I'm just trying to place my chips where I feel protected in this market, right? Now, don't get me wrong, guys. Like I said, this is going to be a fun year for entertainment. So if you kind of enjoy this content, I'm not shilling you stocks. I just kind of like, showing you companies that I work with, along with just talking about my own personal experience and this kind of ADHD squirrel that lives in my head currently, because God knows I'm a long-term bull on Facebook and all these companies. But as an active manager and watching the stock market every day and this being my job, unlike most people that got to go to their 9 to 5 that should probably just be cost averaging into the market, I hope that you're getting some entertainment out of this. God knows, let me know what you think in that comment section below. But stay cool, stay awesome, and I'm going to go watch the Tesla earnings. Cheers.